Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is September 5th, the first trading day of the week, though it is Tuesday. Yesterday was Labor Day. Hope you had a great Labor Day weekend. My kids are back to school. Today was their first back to school day, so we had some craziness this morning trying to get them up and around. But today we are going to take a look at a building supply company, Owens Corning. This is out of the industrial sector. Let's jump right into the video. And if you want to know more about this company, check them out, www.owenscorning.com. That's www.owenscorning.com. That is their homepage where I pulled this information from. Our story is not simply a history of insulation or building supplies, and that's what they provide, building supplies. So it's insulation, shingles, just other types of building supplies overall and worldwide. They are a worldwide company. It's an intricate tale of innovation and growth spurred by reinvention, curiosity, and strong partnerships built over decades. Our roots reach back to the 1800s lab experiment that, through an unexpected twist, produced mineral wool insulation. This set off a wave of innovation for what would in time become the insulation industry we lead today. Over the decades that followed, we experimented with glass, partnering with organizations along the way to develop new applications and production methods for our innovative products. At the turn of the 20th century, glass manufacturing was focused on containers. By the 20s, Owens Bottle Machine Company had a strong foothold in bottling. However, the advent of U.S. Prohibition and the Great Depression brought a series of challenges that drove the exploration of glasses and other capabilities. Experiments with glass fibers led to products such as glass block and notably the first glass mineral wool insulation. This convergence of glass and insulation led two of America's then leading glassworks companies, Corning Glassworks and Owens, Illinois, to form a partnership in 1935 to share knowledge and costs to explore fiberglass developments. The partnership produced a variety of new materials, processes, and applications in glass and insulation, and in 1938, the Owens Corning Fiberglass Corporation was officially formed. The company, which became known as simply Owens Corning, continued to innovate and form partnerships to expand and strengthen our capabilities in the years that followed. As we found new uses for our materials, we launched our roofing and asphalt businesses in the 1960s, composites in the 1990s. Other businesses were created and invested, and we grew. We survived a hostile takeover attempt in the 80s, supported global architectural feats throughout the 1900s and 2000s, and have consistently earned numerous awards and distinctions for safety, sustainability, corporate leadership, and product quality. Our team has grown to more than 19,000 people in over 30 countries around the world. You can read the rest here. I've pretty much read it all for you anyway. But again, been around since the 1800s, whenever they really got started, really through the 30s and on as a building material manufacturer here in 30 countries. That's important to note as well. So they have a presence all over the globe. We are talking about Owens Corning. Let's keep on going here. And on to the fun stuff. The reason we are taking a look at them today, down 3.39%. We are talking about Owens Corning, ticker OC, out of the industrial sector. Again, a building supply company. Closed the day out at $141.78. 52-week range as low as $74.22, as high as $147. So this one is close to its 52-week high. Average volume 796 million. Today's was 1.1 billion. So a lot of selling off today. You can see that big sell-off in the morning. Looks like they bounced around midday, but mostly down is the direction. Market cap of $12.738 billion. Beta of 1.47. They are more volatile than the overall market. Price to earnings ratio is low at $10.03 per share. EPS earnings per share is high at $14.12 per share. Next earnings date is sometime between October 24th and October 30th. They have a forward dividend of $2.08 paid out on the year. They are a quarterly payer. We'll see that here in a little bit. Low dividend yield on this one, so you would really want them to pull back to try to get a higher dividend yield. This is a little lower than I typically look for, but if they're fast growers, that may not be a problem. 1.42% dividend yield, at least where they're at currently. Ex-dividend date was July 14th. Looks like they paid out on August 4th, so if you were to buy them now, you would get their next dividend. They actually should have an ex-dividend date coming up here soon. And a one-year target estimate, at least according to Yahoo Finance, of $156.08. So they see a new 52-week high here for this one. So it speaks to some upside appreciation in the stock price, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance. Now we're going to look at dividend yield theory. To do that, we go over to statistics. We're going to go down to dividends and splits. We look at their 5-year dividend yield average, which is 1.47. We compare it to its current 1.42. Same number over here for dividend, 1.42%. And since this number is lower, that speaks to some slight overvaluation on this one, at least according to dividend yield theory. So even with the pullback, this one is slightly overvalued. We'd want it over this 5-year average. So if it was 1.5, 1.6, then that would speak to some potential undervaluation. But at least for now, this one is potentially overvalued. Real close to fair value, but overvalued nonetheless, according to dividend yield theory. Very low payout ratio on this one, 12.32%. Now, financials, you're going to find a lot of good information, their balance sheet, their income statement. You can look at their debt to assets, make sure they have growing revenue. All those are important. We're going to look at free cash flow because we want growing dividends over time. And to have that, you need growing free cash flow. 2019 was $590 million, 2020, $828 million, 2021, $1 billion here. 2022, $1.3 billion. Nice, steady growth overall. You can see that clearly here, steady free cash flow growth. And not only do they have steady free cash flow growth, but look at this repurchase of capital stock, right? 61, 318 million, 570 million, 795 million. So not only do they have steady free cash flow, but they are steadily increasing their share buybacks over time. So they have even more free cash flow than what it's showing here. They're using some of that free cash flow to repurchase their own stock. That was my daughter. Sorry, I paused it there. So that was my daughter. They're headed out to music class here. They have that once a week. But let's jump back into Owens and Corning. We're going to jump over to stockanalysis.com. I always recommend more than one source. Another one that I like is stockanalysis.com. So make sure that you are looking at two sources so you can back check the information that you are getting is accurate. Now, according to the 15 stock analysts that they have over there, they call it a consensus buy, though it is close to a hold right there. This would be a strong sell, hold, buy, strong buy. And if you went to stockanalysis.com, you could see out of these 15, if you clicked on each one of these, how many out of these 15 stock analysts call it a hold, how many call it a sell, how many might call it a buy or a strong sell or a strong buy. Now, they have a low estimate of $90, which we saw on the previous slide. Their lowest in the last year was $77. So that would be a 36.48% decrease from where it currently sits here if it was to hit their low again. They have an average estimate of $132.47, which would be lower than where it currently sits. That would be a 6.51% decrease from where it currently sits. And this would present a higher yield. At this yield, you would be probably undervalued according to dividend yield theory. So that might be a good entry point there in the 130s if you were interested in this one. That's what I might look at. I am long this. You'll see my position here. I was buying it significantly lower than what it is now. I wish I would have really loaded up here when I started buying this a while back. And they have a high estimate of $185, which would be a 30.56% increase. And that is significantly higher than what we saw for Yahoo Finance's estimated price at the 150s, which is still higher than their average here too. Now, under statistics, you're going to find the same information that you would find on Yahoo Finance, just presented in a different manner. I like to look at return on equity and return on invested capital. It tells us the financial efficiency of the company. And I like 10% or better for these. Return on equity, 27.8%. Smokes the 10% I like. Return on invested capital, 22.30. Same thing, much higher than the 10% or above I like. I also like to look at their estimated EPS growth forecast over the next 5 years and their revenue growth forecast over the next 5 years. Unfortunately for this one, they do not provide that. And it is probably because they have been growing significantly over the last 3 years, over 30% EPS growth, but that is not typically what they are doing. They typically have around 7% forecasted growth or 7% growth over the years. That's what they average, which is above the 5% that I look for. I did look at that on a couple different sites. I should have clipped it in here, but overall, they're probably concerned with giving a forecast because their forecast is not going to match the last 3 to 5 years worth of growth that they have. Their last 3 to 5 years have been significantly higher than their average growth. Now we'll jump over to the dividends. Again, I am long Owens Corning. I have 44.39 shares. I am up significantly on this position, up 54.49%. I have $4,071.08 into this. It's currently worth $6,296, so I am up $2,225.20 So big jump up again. I wish I would have been buying a lot more of this back in the 90s whenever I was. My cost basis is $91.71. I would love it to drop back down to there, though I'm not seeing that anytime soon. Again, if it drops back into the 130s, I may look to add to this position. Anything under probably 130 at this point, I'll look to add to this position overall. Low payout ratio, 14.68. I think it showed set 12% on Yahoo Finance, but still low. Anything under 15% is very low payout ratio. And this is really high. Very, very high dividend growth, 45.8%. I don't think that's sustainable, but if they were to keep this up even for the next couple of years, you would probably get into the 2% range on dividend payout pretty quickly. Went back to 2020, you can see 24 cents here, jumped it up into March of 2021 to 26 cents, jumped it up again in March of 2022 to 30, or actually January 6th of 2022, they jumped it up to 35 cents, jumped it up again in January 3rd of 2023 up to 52 cents. So I would expect either in the January, March timeframe of next year for them to jump this up again, and I would love if they maintained this 45.8% growth rate here. This is the vested interest stock screener. This is how I set up the videos. Understand the business, growing free cash flow last 5 years expected in the future, growing dividend payout ratio of 75% or less. Check the valuation based on dividend yield theory. We saw that buy below current cost basis or within 15% of its 52-week low. This one I would forego that one because this is a fast grower and is nowhere near its 15% of its 52-week low. And it is nowhere near my cost basis and doesn't look like it's going to get back there anytime soon, if ever. Return on invested capital, return on equity equal to or greater than 10. Both of those numbers were smoked on this one. And earnings per share growth equal to or greater than its industry or 5% plus. It beats both of these. It's greater than its industry currently. And the last 3 to 5 years has been over 7%. And for financial companies, I add in price to book. You can use this for any company. You want to compare it to their industrial average or 1 or under if it's a financial company is fair value at 1, undervalued under 1. And it must meet 5 of 8 to be investable and must meet 6 of 9. Now, if a company does meet these metrics, I will do a deeper dive into its revenue, into its income statement, balance sheet, and see where it sits and see if it still makes sense, and then invest based on my estimate of fair value. And that is really it for this one. That is Owens Corning. What do you think? Is it in your portfolio? Do you have other building material suppliers that you like? Builders First, I think, is one out there. I know Buffett recently loaded up on a lot of builders, so maybe he sees some value in this sector overall and foresees a lot of the builders, maybe benefiting from the storms that we've recently had. A lot of damaged homes out there are going to need to be rebuilt, as well as a lot of people overall that are renters are going to be needing houses over the next 10, 20, 30 years. So maybe there's some value there. It's one that I have in my portfolio, maybe worth a look with this recent pullback. I'd love for it to pull back a little bit further. As I mentioned, again, under 130, I'm probably interested in adding to my position. So a little bit more to go, but this is one I thought we'd take a look at today. Again, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that notification bell as well so you're notified whenever we put out any new content. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock like the Owens Corning that we reviewed today that you'd like me to work into a stock pick of the day video, go ahead and drop it down in the comments section below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks you can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counselor, certified financial advisor.